So, how does investor psychology impact trends? So, just get to that slide. Thank you. As we know from basic economics, supply and demand establishes the price of any good. It is no different in the securities market also. Supply and demand, when sellers and buyers agree on a trade, determines the prices. What does price and especially price change tell us? Presumably, if a substantial number of transactions occur at one price, the price is telling us that the supply and demand are in temporary equilibrium and that both buyers and sellers are satisfied. Of course, in financial markets, long-term equilibrium is rarely reached. Price constantly changes, if only by minuscule amounts, as they move toward a theoretical equilibrium. They can oscillate in small increments or large. They can go up or down, or they can do both. Whatever the price movement, it is ultimately determined by the expectations and power of the buyers and sellers. If broad expectations are for a higher price in future, but with little or no capital to act, prices will remain as they are or even decline. Of course, expectations change as does the power to act. Nothing is perfectly stable or constant in the markets. When prices travel in a trend, calling trending, they remain headed in one direction, and they tell us that there is an imbalance of demand and supply. Some will incorrectly say that there are more buyers than sellers or vice versa. However, in every transaction, there are an equal number of shares transacted, and thus there is always temporary equilibrium between buyers and sellers at that instant in time. What makes a trend is the power of the buyers or sellers. Do they have enough stock or money? And the aggressiveness or anxiousness of buyers and sellers. Do they have specific information of deduction, rational or irrational, or are emotions of fear or greed propelling their actions? We know from behavior studies that psychologically a positive feedback mechanism in our minds tends collectively to sustain the trend in an uptrend. For example, buyers who have profited tend to continue buying, being buyers, and new buyers seeing what they have missed also buy. Just like Bitcoin. It's a bubble anyways. The price trend continues upward. Eventually, over a longer period, prices revert to some kind of mean or value. But meanwhile, they trend up, down, or sideways. If, for example, prices are gradually rising, then buyers must have stronger positive expectations and be willing and able to play more money in the security. In the next chapter, we will determine how is the trend determination techniques used. Thank you.